Okay, good afternoon, everybody. I think we're live. Once again, good afternoon. It is Wednesday, August 10th, 2022, and we are reporting live from the one and only Park Avenue near 57th Street, New York City's Billionaires Row. Hope everybody had a fantastic day today. It's going to be an action-packed stream. We do have a lot to cover. Obviously, the topic of the day that everybody wants to talk about, it was the talk of Wall Street today, and that is the CPI numbers coming in lighter than expected. Now, if you guys remember, all this week and even last night on the stream, my prediction was that CPI would either come in line with economists' expectations or slightly below expectations. And the reason why I said this is four main factors that I believe were the historical drivers of this inflationary event that we've had post-COVID. Number one, the critical supply chain issues, the backlogs, and just the overall atrocity that happened in the supply chain. We are seeing wages increase at an unprecedented level, causing the wage price spiral. The third thing we were talking about is rent and shelter costs. Right? It seems like every other day we're getting a new article out talking about how rents and prices of single-family homes have hit a new all-time record high, and last but not least, commodity prices. Now, if we review to last night on the stream, I said I think two of those four factors are settling down here, and that's actually what we saw today when we got the CPI report out. So before we start to talk about it and before we start to actually do a deep dive into the report, I want to share the actual piece of data, the report, with everybody, so maybe you could follow along on the stream yourself. So if you type !CPI in the chat, !CPI in the chat, I programmed the Nightbot to drop you the actual link, not a CNBC article, but the link to the U.S. Bureau of Labor Statistics CPI, or the Consumer Price Index summary that was released today, August 10th at 8:30 a.m. Now, I think it's really important if you scroll about halfway down the page to actually take a look at the seasonally adjusted changes from the previous month, right? So I think there's going to be two main things that we're going to look in today. Obviously, it's the adjusted year-over-year price increases or decreases, right? But I think if we go a little bit more granular as investors and as traders, I think that's where the key and most important data lies. Because obviously, we're not going to see cataclysmic year-over-year changes, but where we will start to potentially identify new trends that are developing in the economy is the month-over-month proceedings, right? So the month-over-month changes. Lastly, we're going to be covering Coinbase's egregious earnings report. They lost about $1 billion in Q2. We're also going to be touching on the Inflation Reduction Act. Now, I know we've been tearing the Inflation Reduction Act apart. We're going to talk about some of the positives. We'll also hammer on the negatives. And we're also going to talk about the $7,500 tax credit for EVs that was extended through 2032. But there's a catch, and we're going to talk about that catch tonight on the stream. I think that was a pretty good intro. What do you guys think? Let me close my laptop here. Quick update on the weather. It is not as egregiously humid as it was last night, so I think tonight's going to be a really enjoyable stream. Hopefully you guys had a good Wednesday. Happy middle of the week already. And now it's time for my favorite part of the stream, where we get to say hello to everybody in the chat. I see GG New York City. Good to see you, GG NYC. Hopefully you're well. Happy Wednesday, everybody. Good to see you. Good to see you. I see Brian. Hey, Brian. Welcome. Always a pleasure. The ABX girl is here. Tiffany Allen says, hey, guys. RY Davis says, hola, Tom. Hey, from Florida. Hey, speaking of Florida, I will be back in the beautiful Sunshine State, beautiful Miami, Florida on Monday. So please stay tuned for some of those streams. Anthony is here, says, hey, Tom. What's up, Anthony? Hopefully you had a good day. Happy middle of the week, everybody. Natalie is here, says, hello, Tom. Good to see you, Natalie. Rusty Golfer says, good evening, everybody. What's up, Rusty? Andy is joining us from the one and only South Korea. Good to see you, Andy. Hopefully everything's going well in Korea. Sunshine after rain, thank you for being a great moderator. Robert is here, says hello all. Teresa Diaz, welcome. Austin City Limits says, hey Tom. I see Charlie Richardson. This is brilliant intro as always. You know what I may do, everybody? You know what I was pondering, thinking about a little bit? Yeah, so Deborah was right on the money at about 8.5. You know, we're a little aggressive, which I understand. But I think, I think this guy's gonna hit this guy. I know, hopefully not. So last month, I thought the CPI print was gonna come in below expectations. It actually came in over expectations, but this month we're starting to see some deceleration here. And I think that's normal, right? If we've been paying attention to the streams, if we've been paying attention to the futures market, what we've been seeing is exactly that, right? Commodities are rolling over here. Just look at the price of crude oil, the price of gasoline. We're gonna go into those granular details in a minute, but Deborah, I think you're right, you hit the nail on the head. Kings9966 says, most informative and interesting guy doing what you do. Hey, Kings, appreciate it, my friend. Denise, New York City is here. Welcome. Hey, Denise. Brian says, can't wait to hear your take on the data and such. Yeah, we're gonna get into it, we're gonna dive into it tonight. You know, maybe we'll start off by walking a little bit further uptown. Because when I came out of the office, I literally just stopped working probably all of 15 minutes ago. We did run into those roller skaters again. So it seems like every Wednesday night, I think every Wednesday or Thursday night, there's a massive roller skating meetup in New York City, and they skate the entire, I think, the length of Manhattan. It's so unique, so maybe we'll run into them again. Hey, Austin City Limits is Tom. I suspected it would be 8.5 CPI. Yeah, so it came in under consensus, which is actually really good. So we're going to talk about the good and the bad, right? I think that, you know, to jump up and down and say everything is rosy, I don't think we're there yet. But here's my prediction. I do think we're going to continue to see deceleration as the months go on. And the markets liked it too. Once the CPI numbers came out at 8:30, futures took off like a rocket and ripped the shorts' faces off. Wendy England is here. Hey, Wendy England. Dante Rose says, hey, Tom, be careful out there. Thank you, Dante. I appreciate it. Thank you for the well wishes. Sally is here. Says, hello, Tom. Beautiful view. Yeah, so we're standing on the corner of 57th Street and Park Avenue. It's going to be a beautiful night out here in New York City. And the extra good news is that the humidity has broke and is starting to come down. So it's actually not too bad. Google is here. It says, hey everybody. Good to see you, Google. So I guess just a really brief and quick overcap. Obviously, many economists on Wall Street that were polled by Dow Jones expected the CPI to come in at 8.7% year over year. The CPI index did indeed rise about 8.5% in July from a year ago, coming in below expectations, mainly due to a drop or a severe drop in energy prices. And we've been talking about this pretty much ad nauseum on the stream. Back in March, we hit a high of about $130 a barrel in crude oil. Now we are trading all the way down to about $85 a barrel. If you look at commodities in general, lumber futures taking a big hit, copper futures taking a big hit, and if you even look at the prices of gasoline, what we're paying at the pump, the good news is prices are coming down. Okay, it wasn't all too long ago that we were talking about on the stream $5 a gallon of gas going on $6 a gallon of gas. And if you remember correctly, what we say is usually when you see a lot of those articles, everybody freaking out, going into pandemonium, everybody's talking about it at the office, saying, oh, by the next time you know, we're going to be paying $10 a gallon. Well, that's probably around the time we should start to take the other side of that trade, right? And this is not exclusive for futures trading. This is pretty much in anything, right? If you have the mainstream media and everybody talking about how there's a specific stock that is going to continue to go up and it's never going to go down, well, that's probably right around the time you should start scaling out of those positions. And a lot of the times institutional investors will do this as well. What they'll do is, they'll go on a mainstream media outlet and they'll start to talk their book, right? Because at the end of the day, these institutions are running a ton of money. So what do they need in order to unwind those positions? They need liquidity. So usually at the top of market cycles, there'll be extreme news events saying, oh, everybody has to pile in the crude, everybody has to buy all the oil stocks, and that stirs up the liquidity in the market for other people to exit their positions, right? So I think we're seeing inflation come down a little bit. Prices are still going up, but they're just not going up as fast as they were. But one of the main things I want to key in here tonight is not only talk about the year-over-year numbers, but get a little bit more granular to those month-over-month numbers. Austin City Limits says, thank God gas is slowly going down. I agree with you 100%. I think every American would agree, right, regardless of your political party or political status. It's good news that the prices of energy and gasoline specifically are going down. Now, the bad news is, and we're going to talk about it all tonight on the stream, shelter costs are still picking up steam quite a bit. And that is not good. So obviously the price that people pay for rent is still really, really hot. It's still really, really hot here. Hey, Paranormal Witness Girl is here. It says, hello, Tom, ¿cómo estás? Muy bien, y tú? Good to see you. Paranormal Witness Girl is our friend from Fort Lauderdale. So we're actually going to walk past the Trump Tower, which is right here. And I want to show you guys all the news stations, the media outlets that are right outside, broadcasting live in front of the Trump Tower for obvious reasons. 214i5 says, your CPI prediction of 8.5 was spot on. Yeah, I do kind of want to pat myself on the back about that, but then again, I was really, really wrong these past 2 months. I think my overall thesis was correct that, because you guys know me, we review this every night on the stream. Pay attention to the futures market. The markets usually are forward-looking indicators, but I think I was just a little bit early, right? It takes a while for the prices to actually show up in the CPI numbers. So I think the next sort of nut to crack here in the CPI is going to be shelter costs. But overall, energy prices are coming down, which is good. They're still accelerating, but it just at a slower pace than before. Hey, Western Mass Dave, what's up? Good to see you, Dave. I see Evan is here, says hello. Welcome, Evan. Paranormal Witness Girl says, true that. I'm happy gas is coming down. I can only store it on the fridge once it hits $2.99. Well, you know what? So I think I was checking if you go to like AAA, I think it's AAA.com. I forget the exact website, but you can look at the average or the national average price of a gallon of gas. I think we're actually under $4 now. I think we're actually under $4 and declining, which is good. Obviously, the hot spots such as California, parts of New York are still a little bit elevated, but the closer you are to Middle America, prices tend to come down. Yeah, Lila says, hey Tom, I'm not sure what we can do to stabilize shelter costs either. So let's touch on that a little bit, because I think Lila makes a good point, right? So obviously the Federal Reserve is going to be scrutinizing this CPI report with a very, very fine-tooth comb. Okay, because if we think about the percentage base of shelter that goes into the CPI, it's about 33%, so a third, right? A third, and a third. And the bad news is, you see all the news reporters outside the Trump Tower? There was even more earlier today, by the way, but yeah, it seems a lot of people are reporting live here. I'm not sure what news network that is. But if we think about shelter costs, it makes up about 1/3 of the CPI. The bad news is that shelter costs rose about 5.7% year over year. Okay, that's just not sustainable. That's going to push people out of their homes, unfortunately, which leads me to believe, even though the market took off today, because what did we say before? If inflation comes in hotter than expected, that's going to force Fed Chair Jerome Powell at the next FOMC meeting to raise interest rates and raise them in a pretty big way. But since the CPI actually came a little bit under analyst expectations or economist expectations, I think a lot of people on Wall Street believe that the Fed is going to come in a little bit dovish. Here's why that may not happen. And again, I'm following the overall trend of the market, but I like to play devil's advocate here. Because again, if you scrutinize the CPI numbers and if you scrutinize the CPI report, one of the largest components is still ramping. I'll give you guys a view of the outside of the Trump Tower. But one of the largest components of the CPI report is still ramping. Obviously, it's good that Americans are getting a little bit of a break at the pump, right? Gas prices are coming down. But shelter costs, once again, that make up 33% of the CPI, did rise about 7.5% year over year. Hey, Photos from around New York is here. What's up, Photos? Good to see you. TMB says, hey Tom, I bought gas at $3.29 the other day. It was $3.79 just a few miles down the road. Love that. Brian says, listening to your analysis is much better than all those propaganda news on all sides. Well, I appreciate that. I'm kind of bummed out. I mean, you should have seen this earlier today, everybody. All lined up and down Fifth Avenue. There was news channels, news stations from all over. I even think international news sources all lined up and down Fifth Avenue. But they're all gone now. There's only one straggler over there. I guess they saved the best for last, which is him. Hey, OT is here, says sup man. Prudy says hello from the Dominican Republic. Good to see all of our viewers here tuning in from the DR. Welcome. Brad is here. What's up, Brad? Yeah, David. So David makes a good point too. So David says food is rising. So I think what I'll do now, I did take some notes here because the CPI report is just so massive that it's almost impossible to memorize all these numbers. So for those of you at home that want to follow along and actually read the actual report that was released this morning at 8:30 from the Bureau of Labor Statistics, if you type !CPI in the chat, once again, !CPI, I did program the Nightbot before I left the office to drop the actual physical report so you guys can follow along there. So just a quick recap, core CPI. So as we talk about, what is the one thing that the Federal Reserve actually watches more than the headline number, more than the headline CPI number? It's core CPI, and core CPI is exclusionary of very volatile food and energy costs, right? So if we think about core CPI, that also rose about 5.9% annually and 0.3% month over month. However, many economists on Wall Street were predicting 6.1% and 0.5%. So coming in below expectations, which was good. Real wages, which we talked about last night on the stream, saw a 0.5% monthly increase. However, and you guys know this because you've been paying attention to the streams, factoring in inflation, all of those wage gains that we've all got over the years were negated, and we're actually making about 3% less year over year. So that's always good and always depressing to think about. So even after those wage gains of about 0.5% month over month, factoring in inflation, wages are actually down 3% annually. And we sort of talked about why, right? We sort of talked about one of the main reasons for this. And that's because even after we got that banner, ridiculous, over the top, rip your face off jobs number last week, which was about 528,000 new jobs added, you're seeing the labor force participation rate decline in tandem with those added jobs. So what that means is employers have a smaller talent pool to recruit from, which means a lot of the negotiation power actually goes back to the employees. So as employees are making more, corporate America is not a charity tank. We're here to make money. So what they do is they pass those added costs on to consumers. So even though they may be paying their employees more, they're going to try to find a way to offset that cost by raising the price of their products and services, of their goods that they sell. So I just wanted to explain a little bit as to why many economists out here believe we are in what's called a wage price spiral. because corporate America is always going to try to pass those additional costs on to consumers. However, on a monthly basis here, right, I think we need to be fair, on a monthly basis, prices were actually flat, and this is due to the energy prices declining about 4.6% and gasoline falling about 7.7%. This offset the 1.1% gain in food prices and 0.5% increase in shelter prices. And again, this is month over month, not year over year. So it's a give and take, right? So really nothing new. The same thing as we've been talking about yesterday. We knew that food prices was going to come in a little bit hot. We knew that shelter was going to come in a little bit hot. We knew that wage gains were going to come in hot. The only two saving graces that we predicted, and we were actually right here as a group, was gasoline prices falling, those commodity prices falling, and the like. So, but here we are outside of the Apple Store overlooking the beautiful Plaza Hotel. David says gas is still up 44% for 2022. Yeah, so on a year-over-year basis, you're right. So on a year-over-year basis, you're absolutely correct. But I think in order to identify a good, appropriate trend, right, especially if you want to make an investment decision or a trading decision off of it, a lot of the times the mainstream channels will have you focused on the big year-over-year number. I actually think it's more important to focus on the month-over-month numbers, right? Because if you really, really scrutinize the month-over-month numbers, you can start to identify an emerging trend and sort of get on that right side of the trade. And obviously, we've been talking about this on the streams. Oil prices have been coming down since March. We've been scaling out of energy while everybody in the media is telling you to get in, and that's how it's done. Yeah, David, you're right. Lumber's down big too. Lumber futures are down big as well. I see Gregory in the chat. Hey, Gregory, hope you had a good day today. Man, I mean, guys, what a difference a day makes. Yesterday was some of the most unbelievable humidity I've ever experienced in my life. Today's actually really nice. So humidity came down a little bit and the CPI came down. So a big win-win for today. Martin is here. Good to see you, Martin. Hopefully you're well. So I want to show you guys the Apple Store. This is right on the corner of 59th Street and 5th Avenue. This is the flagship Apple Store. It's actually underground, which is a little bit interesting. Yeah, Indie Guy says, hello Tom, it's getting dark sooner. So Indie Guy, correct me if I'm wrong, but I think today was the last day that the sun set at 8:30 or 8 o'clock. Am I right on that? I think today was the last day for that. Hey, Ibrahim Azam is here. Welcome, Ibrahim. Thank you for joining us tonight. XOXX Bob, welcome, Bob. Connor says, hey, Tom, West Village tonight. Dude, I'm going to try to make it to the West Village, but the only thing is I really can't. I have to get the earlier train today, and I fear if I go all the way down to the West Village, I'm going to miss the earlier train, and I'm going to get home at a very late hour, which I can't. You know, not for nothing, I actually went on a golf outing today with one of my clients. CT says, hey Tom, from across the river in New Jersey. Good to see all of our viewers from New Jersey. CT, good to see you. Austin City Limits says, need to get back to production of oil on our land. Della's Lifestyle says, Tom, can you please replace Joe on CNBC? He is horrible. Oh man. I appreciate the compliment, I really do. Alex says, hey Tom, Joe Hernandez says, yes, the last day for an 8 p.m. sunset. What's up, Joe Hernandez? David says, you underestimate the impact of food costs where shelter costs are low, such as rural areas. Yeah, that's true, but I think the biggest, and again, we've been talking about this a lot, I think the biggest concern for me, if I was President of the United States, is the cost of shelter. And so here's why I say that. And this is what I believe. And again, before I say this is very opinionated. Okay, I always like to give the viewer of the stream discretion as to if this is a factual statement or if this is just my personal opinion. So this is going to be an opinionated statement here, okay? That's the disclaimer. I think it is so critical, especially as you plan for retirement and get older, that you absolutely make it a priority to make sure your living expenses are fixed and paid for. So here's what I mean. I think if you can, if your means allow, one of the first investments you should make when you're young, and again, this is all opinionated, this is totally up for debate, is acquiring a piece of real estate and having tenants pay down that real estate. So let's say if you only put 10% down or 20% down or something like that, and you house hack. Let's say if you buy a single family home, it's a 4-bedroom, 2-bathroom house. And let's say you're 23 or 24 years old. You know, at that age, you could afford to live with roommates. The good news is all those roommates will be paying all of your expenses, paying the principal pay down on your mortgage. And before you know it, in the next 10 to 20 years, you'll have a house for free. And as you're older, you're guaranteed to have a place that is fully paid off. And if an emergency happens, you can open that house, whether it be a single family home, a duplex, a triplex, you could always open that up to tenants for rental income to subsidize your living in retirement. So I think, and I'm going to write about this in the Behind the Street newsletter. I have some bad news about the newsletter. All of it got erased, so I'm a little bit bummed out about that, but that's a story for another, maybe in the next 20 minutes. What I think is that should be the sort of hierarchy of needs there, right? You should be able to acquire a piece of property when you're young and have tenants pay down that property. So when you're older or in retirement, you don't have to worry about the landlord coming knocking and saying, oops, due to COVID inflation, we're going to raise your rent 50%, right? You want to have ownership of that property with tenants paying down that property, preferably a duplex or a triplex or something like that. So when you're in retirement and you're living on fixed costs, if worse comes to worse, you could actually have tenants move in and you're living free and clear. So I think especially as we've been watching this trend, as rents are continuing to spike, we're just starting to see a little bit of cooling in the single family housing market. I think it is very critical, especially for those youngsters out there watching the stream, to be very creative about your first real estate investment, preferably a duplex or triplex. Put some money down and make sure the deal cash flows, because your 60 or 70-year-old self will definitely be thanking you. I can guarantee you that. Hey, Borat is here, says I bought a single family home, biggest mistake I made. Oof, that's not good. So why do you think it was the biggest mistake you made? What mistakes did you make? Mr. Lucas the dog says the best part of my day is learning and walking the streets of New York. Thank you so much. It's my favorite part of the day too. This building right here, everybody, is 220 Central Park South. 220 Central Park South. Somewhat knowledgeable geek says good evening, Tom and all. Hope a long time since I've been here. Yeah, somewhat knowledgeable geek. It has been a long time. It definitely has. Somebody says, what about global warming? You might buy something that's worthless in 20 years. I might buy something that's worthless because of global warming? What do you mean? Joe says, Tom, excellent advice. You are spot on about real estate. And again, these are opinionated statements, by the way. I always like to say that. Jordan says, which city would you invest for a starter home? It depends on where you live, work, and play, right? So I plan to acquire the vast majority of my real estate investments in New York and in Florida, because that's where my family is, it's where I want to be. But you can make money and invest wisely in real estate in any market. You just have to make sure the numbers work. You're not taking out too much debt, and you're not trying to play catch up with the Joneses, right? Just because your buddy from high school that you barely talked to bought a house doesn't mean you have to go and rush in and get one, right? Do the financials based upon your income, based upon your budget, and preferably if you're young. I think one of the best investments a person that's young can make, it was one of the best investments I ever made, is trying to acquire a duplex or a triplex, or it could even be a single family home, but automatically have roommates move in and you have a free house. You just have yourself a free house. So, Anthony says the home I bought last year is giving me. Good to see you, Anthony. February says, hey man, new around here, really enjoy February. Good to see you. Thank you for being here. I appreciate it. Let me make sure I'm not missing anything. Jordan B says, what are your thoughts on the current interest rate hikes and its effects on residential real estate across the country? Do you think rates will start to decrease? Well, I think that's a really good question. And after today's CPI print, it seems as if a lot of people on the street think that, right? Because let's say if today we got a very, very high CPI print, well, that means the Federal Reserve would need to come in here potentially at the conclusion of the FOMC meeting in September and go really big. They would need to bomb 100 basis points or 75 basis points. So even though we got a little bit of a light CPI reading, which is good news, futures traders think that the Federal Reserve is going to come in quite dovish. Now, if I was Fed Chair Jerome Powell, I would continue raising interest rates in increments of 75 basis points. And I think I've sort of explained the reason why. But going back to your question, what I think about residential real estate, will it come down? Yes. However, I think it'll come down in very, very select markets that have gone parabolic during the pandemic. So, for example, select markets where you had 10 years worth of property growth packed into 24 months, those will probably correct 10 to 15, maybe 20%. And the areas that I'm thinking is probably localized to maybe parts of southern Florida, Tampa, Florida, a lot of places in Texas, maybe Houston, Texas, Dallas, select markets in Nevada. And again, the reason why I say that, and I'm not calling for a housing crash, I actually think the housing market is going to remain stable, but I think in the select markets where we've really, really seen turbocharged growth, that's going to come down. Because there was a lot of really, really wealthy people from, let's say, California and New York that paid $200,000 more than the actual home was worth in southern Florida and other places just because they wanted to bug out, right? So I think you'll see those markets normalize. I don't think you're going to see a crash. I just think you're going to see them normalize. But it's interesting, if we look at that 30-year mortgage yield, that's actually come down materially. And the reason for that is because that 10-year U.S. Treasury yield has actually come down materially as well. If we notice, I think about 3 months ago now, the 10-year U.S. Treasury yield actually came down from about 3.45%. Now we're under 2%. I mean, now we're under 3%. So if you want to know where the 30-year fixed rate mortgage is going to go, just keep your eyes peeled on that 10-year U.S. Treasury, because they tend to move in lockstep or in tandem. But I don't know. I mean, I'll turn it back to you guys. Sometimes I like to hear your point of view more than mine. What do you guys think? Do you think that the Federal Reserve is going to really scrutinize the CPI report and say, okay, used car prices are coming down, that's good, but shelter prices and food prices are still ramping, we're going to go big with the rate hike? What do you guys think? But this is 432 Park Avenue, which is another one of my favorite buildings here on Billionaires Row. And this is the Trump Tower where we just were, where all the news reporters were, obviously reporting on that FBI raid at Mar-a-Lago. Let me show you guys the Steinway building. Hey, Vinny and Maria Castellano are here. Good to see you guys from Staten Island. Hey, Maria. Hey, Vinny. Chris is like, have you seen Who Lives in West Virginia? I have not seen. I have not seen. I'm not too familiar with West Virginia, to be totally honest. Hat Guy says, I'm scared. I need to stop listening to my president. David says, the dollar is incredibly strong against the EU. The pound and almost every other currency, 1-to-1. Yeah, so you're right. And David, So David Individual in the chat actually makes a really, really good point. And that is a really important trend to watch. So this earnings season, what have we noticed? Because obviously every single earnings season, we cover almost every one of the big name brand companies. Well, check out these dogs right here, everybody. Check these guys out. We're gonna get a good look at them right now. This is like 10 out of 10 on the dog scale here. Love them. I guess we'll walk down 6th Avenue. Well, maybe we'll go over to Columbus Circle. I want to show you guys Columbus Circle. Yeah, Dave is like, it's a search, not a raid. Hilarious. Yeah, it was funny. Just a quick segue here. So the news broke that Donald Trump got raided or searched or whatever you want to call it right before we were about to start streaming. So when I got on the train on the Long Island Railroad to go back home, I couldn't read like one actual article about what happened. It was just people fighting over the terminology. Was it a raid or was it a search? To which case, I don't really care. I just want to know what happened or why.
I could die there. What?
Western Mass David. Keisha says, would recommend buying now or when it crashes. Well, I can't recommend anything, but I don't think the real estate market is going to crash. I have this, and it could. Like, we're just sort of talking amongst each other on the stream. But here's a trend that I've noticed that has developed ever since the lows of the 2008 financial crisis. Every time we have an economic downturn, or let's say a correction in the stock market or a bear market, everybody always thinks it has to be as cataclysmic as 2008 all over again. Not everything has to be Armageddon. Okay, it could be Armageddon, but just remember that. It does not everything, every little downturn, every little wiggle in the market means, oop, Armageddon again, everybody's gonna lose their homes and everybody's gonna die, like in 2008. So I think right now there's big opportunities in the market, just like there are in any market, to buy really, really good companies producing a lot of free cash in the stock market, and then there's really good deals out there in real estate. It just depends if the numbers work. So if you view a property, the numbers work, and you think it'll cash flow, then I would do the deal. If the numbers don't work, then I wouldn't do the deal. So this is the Essex House. So this is the JW Marriott Essex House, which is a 5-star hotel on Central Park South, overlooking Central Park, absolutely beautiful. And then we have the Stairway to Heaven building, or the Steinway building, which I believe is now officially open to tenants. So the weird thing is, I believe this building only has about 86 floors, but there's only 63 or some odd units. So think about that for a second. That means on almost every floor, the owners own the entire floor. So it's like one apartment is one floor. Crazy stuff you get here on Billionaires Row. Hey, Roy S is here. This is 10 out of 10 for the scenery. What's up, Roy S? Peter Webley says the market has nothing to do with the economic reality of most Americans. Peter, I think that's very, very nicely said there. Steve says you're always doing these walks while I'm drinking. Love the videos though, brother. Thank you, Steve. Enjoy your drink, my friend. Train Fears says, yeah, between the periods of 10 and 19, we had business cycles, but it wasn't anything crazy like COVID or the housing bubble. Yeah, and I also think we were addicted to the Federal Reserve. I've always made this comparison that anytime the Fed tries or attempts to reduce their balance sheet or to raise interest rates, we flip out, right? The market goes into a taper tantrum, and then the Federal Reserve cries uncle, and they get back in here and start buying bonds again, buying mortgage-backed securities, and lowering interest rates. So I think that's what's driven a lot of this super cycle in the stock market as well. is the, I would say, a little bit irrational behavior on the monetary side of the house. But everybody, check out, look at how amazing these buildings. So we're looking at 157 here on Billionaires Row. I think it looks so unique amongst all the clouds here. What do you guys think? Hey, Joyce Carter's here. This is good evening. Welcome, Joyce. So if we want to whittle down into the CPI report a little bit more, at the end of the day, inflation is still remaining strong, right? So that's the bad news. Inflation still remains strong. If we think about the food jump year over year, food is still up about 10.9% year over year. That is the fastest rise, or the fastest pace, or the velocity of food prices increases since May of 1979. The two products in the food category, or let's just say three. The three products in the food category that are up the most is butter, 26.4% year over year, then eggs at 38% year over year, and then coffee at 20% year over year. Now, even though energy prices, came down materially, if we think about electricity prices, they still did rise by about 1.6% and 15.2% year over year. So on a monthly basis, we still were actually higher. So yes, the headline report says energy is down, but that really only factors from the negation there, for lack of a better term, from oil prices coming down. So oil and gasoline prices are really, really down materially, putting a lot of pressure on the overall CPI numbers. So I think it's important. I still think it's very important for the average American not just to look at the CPI number at face value and say, okay, great, inflation's cooling a little bit, that's good news. That is true, but you need to look under the hood of the report, and that's why if you type exclamation point CPI, so exclamation point CPI in the chat, it'll actually drop the link to the report, to the CPI report, and you guys could scroll down and actually look for yourself. They lay out a pretty nice chart that tells you the components of the CPI, what they've done year over year and what they've done month over month. And again, if you want to catch an emerging trend, focus on the month over month numbers. Hey, Disney Matt says, good evening, Tom. How was your day? My day was good. Can't complain. We're above ground. We're living. Markets went gangbusters today. I had a couple good conference calls. Inflation is cooling. Humidity is cooling. It's not as humid, so I had a pretty good day. Hopefully you had a good day too. Destructionist is here, says that's a cool diner. It is. So I believe that's called the Brooklyn Diner. But Destructionist, I want to show you something a little bit cooler here. Hey, Big Delta Guy is here. This is new viewer. This is awesome. Good to see a Big Delta Guy. Welcome. Everybody, check this out. This is the brand new building. It is called Central Park Tower. The developer is Xtel. And check out how massive that thing is. Does that not look beautiful amongst the clouds there? Now here's what's interesting. I'm going to pan over here for a minute to this building, and this is called 157. And this was actually the building that kicked off the trend of Billionaires Row. So I believe this building right here, 157, was also developed by the Xtel Group, which has developed the Central Park Tower. And billionaire Michael Dell has an apartment in here. Also Bill Ackman. We talk about Bill Ackman quite a bit. And the cool thing is 157 is actually home to the Park Hyatt. So if you live in 157, the good news is you get to use all the amenities of the 5-star hotel. You get to use the restaurant, the private chef, you get to use the saltwater pool, the gyms, the whole 9 yards. So a little bit of a fun fact there. Yeah, photos from around New York, I agree. I agree with you. So now that we talked about the specific segments within the CPI report that were coming in hot, let's be fair. and let's talk about the components of the CPI. Hold on, let me cross the street here. This is a little bit of a wonky intersection. We're on Broadway, 57th Street. There's cars whizzing by, there's bicycles, a lot of crazy stuff going on. So let's look at the monthly declines. And as we're looking at Columbus Circle. So monthly declines, obviously fuel oil fell 11%. Used cars and used trucks fell 0.4%. Apparel fell 0.1%. And transportation services declined 0.5%. Now, we pretty much predicted this as we've been talking about this on the stream amongst ourselves. Why do we think that apparel costs are coming down? What might be a reason why apparel costs are coming down here? Does anybody want to take a stab at it? I'll give you a hint. And again, this is just what I'm thinking, because obviously we've been really going over meticulously a lot of the earnings that have been coming out. And one of the things that we've been noticing from a lot of the big box retailers, the big chain stores, the clothing stores, we've been noticing one main big thing. I think I saw it in the chat. Yeah, Western Mass Dave, bang on accuracy. Inventories have been building up, right? So what happened during COVID is there was so many companies out there like Target, like Walmart, and many others that were so petrified that they wouldn't be able to get the inventory to meet demand that they just ordered way too much stuff. Hold on, so let me move here. I don't like anybody standing behind me when I'm... Let me just... There, give me 1 minute. So many companies, and we've been seeing this on the earnings reports, like at Macy's in particular, they're having massive inventory build here. So I think that's why you're going to see apparel costs really cool here. Also, I'll give you guys a little tip, okay? Here's a little insider tip. Do with this information what you will. I believe if you were in the market for new outdoor furniture or to furnish your house or new kitchen appliances, if you wait just 3 months, you're going to get deals of a lifetime here. Okay, you're gonna get like massive deals. They're gonna start marking this stuff down like you wouldn't believe. So if you shop at a place like Ross stores, if you shop at a place like Marshall's, any of like those third-party brands that buy apparel from the name brand stores and then resell them, you're gonna get a lot of good deals. So if you're in the market for furnishing a new apartment, outdoor patio furniture, appliances, just wait 3 months, okay? I really think, we've been seeing this. We've been seeing this on the earnings reports at all these major companies. They're like inventories are building, and there's actually solid businesses out there. So if anybody's in the venture capital space, one of my good buddies at a VC firm, he's actually funding right now specific companies that their sole job is to do liquidations. Okay, so there's companies out there that will go to Walmart, that will go to Target, and they will buy their products for pennies on the dollar and then sell them back to companies like Marshall's, to companies like Ross stores, Home Goods. So I think you're going to see a lot of discounts and deals coming up here in the next couple months. Yeah, Wendy England's laptops are dirt cheap right now. Good to see you, Wendy England. Iris is here. Good to see you, Iris. JL, welcome. Connor says, hey Tom, how are you tonight? Any plans to walk downtown tonight? So we are going to walk down. I'm just not sure how far we may walk down because I do need to stay in the vicinity of 34th Street Penn Station because I have to get an early train tonight. I have to make sure I don't get the very late trains. Hey, Ahmed is here. Welcome, Ahmed. Good to see you. We are now walking Columbus Circle outside of the Deutsche Bank Towers. But if you guys are enjoying the stream tonight, feel free to leave a like on the video. And if you're new here, hit the subscribe button. We usually do these live streams 5 days a week between the beautiful New York City and Miami. But this building that we're looking at right now is the Trump International Hotel and Tower. Everybody, check this out. You can actually see a guy standing in the window here. Hold on. Is that just me or are my eyes deceiving me? That is a cool shot. Look at this. That guy has a baller apartment overlooking the city, standing in the window. So cool. That's so unique. So in other Wall Street news, everybody, not to pivot away from the CPI report, but I think it's appropriate to talk about this now, since we are standing outside of Deutsche Bank Towers, formerly known as the Time Warner Center. Do you guys remember back in December when there was a lot of questions in the chat about buying gold, buying silver? And I said, I'm always very skeptical of getting involved in the precious metals market because there's crazy amount of manipulation via the futures market and paper derivatives. Does anybody remember me saying that? Well, if you don't, breaking news across the Bloomberg terminal today. Breaking news out of JP Morgan Chase. Now, I'm not surprised at this. I'm not surprised because this spoofing effect has been going on for quite some time. But there was 2 traders in particular that have pled guilty and are convicted of manipulating the precious metals market at JP Morgan Chase over the last 15 years. Will anything happen? Probably not. What'll happen is there'll probably be like a $100 million fine, a $50 million fine. But at the end of the day, they probably made the bank billions doing this. So I guess it's just the cost of doing business. So that's some news there. But one of the ways that they can manipulate the metals market is by flooding the market with what's called paper. They just flood it with the paper derivative, and they can, move the price around, fade it around. So at JP Morgan Chase, they were convicted of doing such. But now we are overlooking the beautiful Billionaires Row. You can see 220 Central Park South and the Central Park Tower. So a former head of JP Morgan's precious metals business and a top gold trader were both found guilty on charges that they manipulated the market for years. Hey, what's up, Dave? This is Tom. You're skating fast towards 18K. Appreciate that, Dave. Yeah, Autumn's I don't really like the idea of precious metals because it's very difficult to store them safely. That is true. I think this is one of my favorite spots in the city, right here at Columbus Circle. One of my favorite spots. Hey, we have Sherry G joining us. Good to see you, Sherry. So I believe the former CEO of Goldman Sachs used to live right in this building. And this building is 15 Central Park West. So I think Lloyd Blankenfein used to have an apartment there. So we have some news coming out of the Inflation Protection Act that passed, and I want your guys' opinion on this more than anything. Now, we've been talking about some of the negatives on it, but I only think it's appropriate to be fair and go into some of the positives, and maybe we could talk about how it can be improved upon. So the good news is, hold on, I'm getting a phone call here. Hold on one second, this guy is gonna blow up my phone. I think I have to put Do Not Disturb on my phone. In any event, hopefully the stream is not buffering. In any event, so the Inflation Reduction Act, the good news is that they extended the $7,500 tax credits, but the bad news is, for some reason, for whatever reason, maybe you guys could help me understand, they put a cap on the price of the EVs and a cap on income requirements. Now, why would we do that? I mean, if climate change is so urgent and that we need to solve this problem, which, by the way, I actually tend to agree, I think it is urgent. I think we should, as a government, as the United States, be encouraging people and making it easy for people if they choose so. I don't think we should mandate it, but if people choose to buy an EV, I think we should give incentives for that. Now, many of you may disagree with me, but I actually agree. I have no problem of the government, which means the taxpayer, helping, let's say, EV companies or traditional automotive companies that are trying to transition and build new EVs to juice their business a little bit, because it benefits the greater good of everybody else, right? So why would we, so the good news is they extended the tax credit, right? There's many people on the right that wanted to get rid of it, but they extended the $7,500 tax credit, but they put an income cap and they put a cap on the price of the car. So if you want to buy an EV that's a sedan, right, a 4-door car, in order to qualify for the $7,500 tax credit, the car needs to be $55,000. What EV is $55,000? That essentially eliminates you getting a tax credit if you want to buy a Tesla. And if you want to buy an EV that's a truck or an SUV, right, like one of the new Fords that are coming out, or, you know, down the line, hopefully the Tesla Cybertruck, the cap is $80,000. What electric truck or EV truck is under $80,000? I mean, none to my knowledge. Maybe I'm wrong. Maybe you guys could tell me in the chat. But I don't think that we should put an income limit on there. And I don't know if I told you guys this already, but I was reading through it, and I think they cap it at, if a single tax filer makes over $150,000, they do not qualify for the tax credit. I also think that's kind of dumb, because if you look at the data, I think the average person who purchases a Tesla, their household income is well over, I think it's $165,000. So I think if we really want to make this push to getting away from fossil fuels, from the pollution, I get it, I understand it, I'm with it. I think we should have no limitations on that tax credit. Again, maybe I'm wrong, but that's just what I think. What do you guys think about it? Jordan B says, I think versions of the Tesla Model 3 start at $4,500, but I see your point, the cap is dumb. Yeah, so Jordan, I think if you get like the bottom of the barrel, like base model, like with nothing else on it, it's like $45,000. But I was on Tesla's website and I did see that, but you sort of need to add things to it. I mean, unless you want a car that goes like 250 miles range, but if you want like a decent piece of equipment, you know, you're probably going to spend over $55,000, right? If you want a Tesla Model S, the Plaids, I think those start at $99,000, don't they? But I don't know. Am I off base here? I could be. But what do you guys think? Della's huge Ford plant being built in Tennessee, Blue Oval. Nice, Della, love that. February says, I believe it's up to $4,000, $7,000 depending on the trim. So in other good news that I think that the government did is they're also extending this to used cars as well. But I also think there's some stipulations on the used vehicles or the used EVs. So I think the tax credit is, I think, up to $4,000 or 30% of the purchase price, obviously whichever's less. But the cap is $25,000. What used EV can you buy for 25 grand? I mean, again, I'm not a car guy, so I'm probably not in tune with this as maybe some of you. But can you buy a used EV for 25 grand? If you can, I actually may look into that then. Dolly Girl Twins is raising interest rates is the wrong solution to the inflation problem, analysts say. Well, I wonder which analyst or which managing director hired them. Steve says, who could afford that right now, really? Well, I mean, I think there's, well, I mean, I guess to your point, I think that's more of an incentivization to give additional tax credits, right? The short guy says, any EV not a Tesla is worthless. And for transparency, I've never driven an EV, by the way. Dr. Longus is in the 70s, they claimed the ice age was upon us, and then they changed it to the ozone layer, has holes in it in the 80s. Florida would be underwater, it's a scam. Yeah, many people, I mean, we could debate climate change till we're blue in the face. And I respect both sides of the argument. I respect the people who... So here's my take on it, just so we're clear. I am a huge... I like love the environment, and I'm just like a neat freak. I hate when people throw stuff on the ground. My biggest pet peeve is people who smoke and they toss the cigarette butts on the ground. And that's why when I was in college, I used to spend a lot of time at Pace University downtown in Lower Manhattan. I'm not sure if anybody's familiar with that. And my biggest pet peeve is you'd have all of these liberal hippies from Ohio. Their parents would send them to New York for whatever reason. And they would, you know, really left-leaning, all about the climate change stuff, but then they'd be smoking cigarettes outside of Pace and throwing it in the storm drains. But little did they know, all of those cigarette butts, they go into the storm drains and then out into the ocean, in which, you know, sea creatures, sea turtles eat them, ingest them, and they die. So I mean, I could say that till I'm blue in the face. But so anything that we could do to improve the environment, I'm all behind it. Climate change could be fake, it could be a scam, I don't care. Anything we could do to improve the quality of the air we breathe, the water we drink, essentially I'm behind it. I'll spend an unlimited amount of money, including my own money on it. Andrew says, hey, I'm from Ohio. Love Ohio, Andrew. I'm just making a point. It's like, you know, a lot of times people will move here and, you know, I just hate people. Don't throw cigarettes in the storm drains, please. Hey, CP is here. What's up, CP? Pit 2 NYC sounds like a little retaliation on Elon, just saying. You know, I never thought about it like that. Do you really think it's a retaliation on Elon Musk? If it is, I think that's a little bit sociopathic, because I think we should all be aligned on not forcing people to buy EVs, but if somebody's interested, we should make it as easy as possible, right? And we should give them incentives to do that. So if that's the case, if it's a little bit of a shot back at Elon Musk, I think that's political theater, and I think that's really, really disingenuous to the rest of us Americans. Hey, Adrian is here. Good to see you, Adrian. Welcome. But it's not just going to hurt Tesla. I mean, Ford came out with a statement right as this Inflation Reduction Act was passed, and they said the same thing. They're like, look, we don't think there should be any income limit, and we don't think there should be any cap. And the government's reasoning behind this is they're saying the reason why we put a cap on how much the vehicles cost is to try to keep the price of the vehicles down. But that's not how free markets work. If the components of those particular that go into those vehicles are going up, you know, the prices are going to go up. You need to sort of let the free market regulate that. But I don't know. Yeah, Sherry G says Singapore is super clean. I love Singapore. Singapore is very, very clean country. I don't know. Not really a big deal, but I was just curious about that because, you know, if we really wanted to make a big push to make a difference, and if the government was consistent on both the right and the left side, I don't think we should have any income gaps, and I don't think that we should have any caps on the price of the cars. If you want to buy an EV, I think that's good. You're doing your part. You're doing your job. You should be rewarded for that, in my opinion. Hey, Martin's Tom. Do what I did and buy an electric bike. It's a lot cheaper than a Tesla. Yeah, that's true. But then again, I'm not a big car guy, and I think you guys know that. The thing that I'm saying is, for the vast majority of people out there, I don't think there should be any cap. Borat says, Tom, I'm pretty sure there's going to be a day in the future when smoking in public will be banned. Interesting. I actually wouldn't be opposed to that. I just don't like it. I just don't like it at all. So let's talk about something really quick, everybody. So this caught my eye today in the Wall Street Journal. I think it was on the second to last page, but I think it's relevant to talk about because maybe this is an emergence of a new industry trend here. So breaking news out of Microsoft. So Microsoft warns, or they sent out an internal note to all of their employees to cut back on business-related expenses. So this could include maybe T&E expenses, taking clients out to dinners, team outings, team building events, and things like that. A big company like Microsoft that's raking in money hand over fist is putting out a warning to all their employees that, okay, no more T&E events, no more team bonding events. If you want to do it, you have to pay for it yourself. So in the article, they highlighted an instance where a manager took his team out, I guess for an outing. It could have been like Top Golf or whatever. I'm not really too sure what it was. But the manager had to front the money to pay for it. Now, I've been in sales in tech my entire life. Never once in the history of my career did we go out as a team and my manager actually paid the bill. You put it on the expense card, okay? And I worked at a company significantly less profitable than Microsoft. So I don't know, is this just Microsoft maybe they're predicting a big downturn in the economy. But for a company like Microsoft to hone in at this level when they actually posted a really good quarter, just seems a little bit odd to me. Just seems a little bit odd. We talked about Microsoft, their earnings report. They maintained really good gross margins. Their Azure unit, which is the cloud computing unit, did really well. The LinkedIn segment did very well. But they're still putting this out there to their employees to reduce spending. Now, I understand that that's normal, right? Okay, we're going into an economic downturn. We got 2 negative quarters of GDP. Let's cool it on the T&E, right? Because I could imagine some of the account executives, maybe some of the enterprise account executives at Microsoft were blowing $1,000 dinners on clients. That I can understand, but I don't know. So my question is, since we saw that story, anybody in the chat, maybe you work in sales, maybe you work in banking, maybe you're in a customer-facing position. Are you getting any of that verbiage from your direct management to sort of cut back on taking clients out, to cut back on, your expense report? Has anybody in the chat have been given those same type of orders just to sort of get feelers out here in the market, just to see what the broader trend is? Jason says, I feel the city goes through cycles, bad and good, and we are in a bad cycle. Sabrina Fair says, Tom, right here, reduce client expenses. Really? So Sabrina Fair, your company's telling you to do the same thing? Tiffany Allen says, absolutely. Okay. Steve says, yes, we mentioned a game night and a senior manager said we would have to cover some of the costs. Oh my God. Okay, and without saying what company you work for, obviously, I know that remaining anonymous is important. Could we just get a market cap of this particular company? Very profitable? Is it a tech company? Is it Fortune 500? Because I'll tell you a story. Back at my previous company, when I was an account executive or major account executive selling into healthcare, So I used to sell into all the major home healthcare agencies, nursing homes, assisted living facilities, like the big infrastructure here in the tri-state area. We were actually tracked and encouraged to take clients out because that builds rapport. So in Salesforce, we would actually be tracked. There would be a metric. I forget what the exact metric was called. I think it could have been gross activity. No, there was like some crazy acronym for it. But essentially it was how many days a week are you meeting with the new clients and making a relationship. So maybe we took them to a Yankee game, okay? Maybe we just went out to coffee around the office, or took them out to a nice steakhouse in the city to sort of build that rapport, talk about the business, and understand their needs a little bit more, right? So as a salesperson, that's normal. So I don't know, maybe it's selective towards what department you're in at the company, but I would assume the frontline salespeople shouldn't be cut back on that. Who knows? Sabrina Fair says, we are publicly traded, net worth $4 billion. Wow. And they're telling you to cut back on expenses. I mean, maybe back office stuff, potentially. UW uses Fortune 50. Mike C says, these companies can save money by cutting unnecessary trainings. Okay, that I agree with. So Mike C, to your point, we used to have these like ridiculous, okay, let me not say that. Maybe that's a little bit mean. Because there were some sales trainers that came in that were really sharp and that I learned a lot, and I thought it was actually money and time well spent. But we would have training days, right, where we would hire a corporate trainer, they would come in, we would do role playing. I would say about 70% of the time it was all nonsense. But there was about 30% of the time where these guys and girls were really good, and I learned a lot. But I think you're right. A lot of the corporate training, we could cut back on that. Keisha says, in healthcare, we were told that no team building exercises. Wow. Mike says, told to downgrade, so I took them to a Mets game instead of a Yankee. That's actually really funny, dude. That's the comment of the night. Let me see who said that. Mike MTL wins the comment of the night so far. I mean, the night's still young. We're halfway through the stream, but you win so far. CT says, usually the first thing that gets hit is new hires. Yeah, that's true. So to your point, Microsoft did put in a hiring freeze. Well, it is a hiring freeze. Just from being in the industry, it's a hiring freeze. But they said they're still going to continue to hire, but just at a slower pace, which is translation for a hiring freeze. Mike C says, someone says penny wise and pound foolish. That nails it. I agree, Mike. So here's my take on the situation. And I think it is important to talk about it because it's very, very critical that we understand what's going on at the heads of corporations. Because usually, these executives are very smart people. They tend to talk to their other competitors within, their total addressable market. And they come to conclusions on what they think is ahead for the business environment. So if they think that sales are going to fall off a cliff, if they think that customers are going to churn because they can no longer afford the product, that's kind of the time when they sort of put out this notion into the world that you got to cut costs. So here's where I think you probably could cut costs. Okay, maybe instead of taking your client out to Del Frisco's. Okay, so Del Frisco's is actually a steakhouse I used to take some of my clients to. It's expensive, but it's a good time. Maybe you could just downgrade in the quality of the steakhouse, right? Okay, that's fair. But to say cut it out altogether, that's where business deals are done. I'm sorry to say it, but a lot of the ways that I've built personal, lasting relationships with my clients is going out, grabbing a cup of coffee, say, hey, you got 20 minutes after work, meet me at, this bar and grill, we'll have a chat, how's the business going, is there anything that you think that I could be doing different to assist you better? Clients appreciate that more than you know. from my experience. So I think to do away with that altogether, I think is what Mike C said, maybe penny wise, pound foolish. We are now outside of the Alliance Bernstein building. We were here yesterday. This building also famously is home to Fortress Investments, which is a very famous hedge fund. I think, I wouldn't say most famous for, but Michael Novogratz used to work here at Fortress Investments, in which case he actually left to start his, I guess you can call it a digital assets investment through Galaxy Digital Investments that acts as an onboarding ramp for institutional clients to buy and hold custody of Bitcoin and other cryptocurrencies. And this is right outside the flagship Hilton Hotel. Hey, Aaron says it's a shame because so many employees overspend or do something crooked with their expenses. The companies probably felt the need to cut back hard. So Aaron, so that's a good point actually. There is a lot of expense fraud, I would say. Like people that are, putting in expense reports for like $500 a month for gas. Okay, that's probably all fraud, I get. And I guess it's one of those things that, if one person does it, it sort of ruins it for the bunch. But I don't know, I just wanted to quickly talk about it. D-Swiss says, hey Tom, I've been through many cycles. Cut discretionary spending is step number 1. Hiring freeze is step number 2. RIF is step number 3. Companies are working their way through the process for low 2022 and 2023 expectations. That's very good insight, and I think you're right. Because we're seeing that across the board. Now, it's not just Microsoft, right? Look at Oracle. I have a lot of friends who work at Oracle in software sales, and Oracle is going through a lot of layoffs, but I've noticed the layoffs are very, very isolated to like customer experience positions. So usually the closer to the revenue you are, right? So let's say if you're an account executive or enterprise account executive, the closer to the revenue you are, and if you're performing, you're probably going to keep your job, right? But like customer experience positions, customer service positions, internal HR positions, those tend to be the first ones to go. But I think you're right. Not for nothing though, earnings did come in pretty decent. Forward guidance at a lot of these big tech companies wasn't bad. Some of them guided down, but maybe you're right. Maybe it's one of those things that's like batten down all the hatches, prepare for the worst case scenario. And if we don't get a worst case scenario, we just trimmed a ton of fat. I think another company that's going to trim a ton of fat is Meta or Facebook. Hey, Brian says, I think cut down or even a step up for team bonding or something like that should be on a case-by-case basis. It's a good thought. That's a good thought. Destructionist is Tom, what time is your train? I'm keeping an eye on it. I think we're good. We're only at about an hour and 15 minutes. I think we're good. Hey, Vegetto14, what's up, man? Says, guess who's back? Good to see you. Hopefully you're doing well. It's always a pleasure you joining the streams. We were doing a deep dive into the CPI numbers today. Thanks for joining. Let me make sure I'm not missing any comments. Dolly Girl Twins says the restructuring will help extend the biotech's cash runway into 2024. Pact Pharma, nearly 100 employees were laid off from personalized cancer therapy maker Pact Pharma. Mike MTL says inflation hurts. Yeah, well, I mean, the good news is inflation came in a little bit lower than expected. But then again, if you guys type !CPI in the chat, so !CPI, I actually programmed the Nightbot to provide you with the actual CPI report. It's important to look at the chart and break it down on a month-over-month basis so you could start to identify new emerging trends, right? I think it's easy for people to say, oh, this is up year over year, which that's good data to look at, but if you want to start to look for an emerging trend, I think it's more important to look at the month over month changes. Now, what was most concerning for me is the shelter costs are still running really hot. That's really concerning to me, because if you think about the main component, or one of the main components in the CPI, about 33% of the CPI report is made up of shelter costs. And that was up quite materially. However, if you want to know the report that the Federal Reserve is going to look at, they tend to look at the core CPI number. And core CPI excludes very volatile food and energy costs. But that was even up to about 5.9% annually, but on a month-over-month basis, up about 0.3%, when most economists on Wall Street were expecting 6.1% year over year and 0.5% year over year. So I don't know, the markets took off today because I think a lot of traders were anticipating a more dovish Federal Reserve at the next FOMC meeting that will be coming up in September. However, I think if we got a really, really crazy hot CPI number, the market may have sold off because they were anticipating higher interest rate hikes and maybe even an additional expansion in QT, or quantitative tightening, which again is the runoff of the Fed balance sheet, or the reduction in mortgage-backed securities in US Treasuries. Now, this is a new restaurant here. I think it's a Greek restaurant. It looks absolutely beautiful. It's right outside of the Radio City Music Hall. And it has 2 floors and it has this beautiful outdoor dining space too. Never been though. Hey, Patricia Ivory is here. Welcome. Says, Tom, you are amazing. You are so right. Don't throw the cigarette butts in the drain. Thank you, Patricia Ivory. I appreciate it. AG Loves NYC says, what do you think of Merrill Lynch as an investment company? Recommend a company that's better? Well, I mean, are you looking for like an investment advisor? Is that sort of what you're looking at? Yeah, I mean, I think Merrill's fine. I can't really advise on who you should go with or not, but I'm assuming, is this like for private banking or ultra high net worth individual money management or something? Oh, check this out, everybody. 50th Street, 6th Avenue. So it says something is sold out tonight. It says sold out tickets. Kalani. Does anybody know who Kalani is? Apparently very popular, very successful. Sold out Radio City Music Hall. That's not an easy task. Zebatata, good to see you. Jenny Trickett says, learn to trade on your own. Hedges are going down. Well, to your point, what was really crazy, one of the most successful hedge funds on Wall Street is down about 50%, or I would say they lost 50% of their AUM. Tiger Global. They blamed it on inflation. That just goes to show you anybody can make a mistake. Tiger Global's down about half. B says Kalani is an amazingly talented R&B singer. I mean, must be, because it's very, very difficult to sell out Radio City Music Hall, so it must be absolutely fantastic. I'm gonna have to make a mental note of that so I can listen to that. Hey, Basketball It Up says Tractor Supply, or is Tractor Supply a good stock? I can't tell you what's a good stock or what's not. We could talk generally about the market, but I don't tell people this is good to buy, that's good to buy. I'm not licensed for any of that. And I would strongly advise don't take investment advice, especially off of YouTube. You could trade ideas and try to grow, but if you're just saying, oh, is this a good stock to buy? I think that's a very bad idea, in my opinion. Hey, Purdy Espinal is here. Good to see you. Check out the color of the fountain here, everybody. Wow, look at that. So you could actually see my old office from here. Hey Bob, this is Tom. Third Citadel property connects the two properties in Brickell. Well, I can't wait to go back down to Southern Florida because we're going to check that out. We're going to do a stream near Citadel. Mustafa says COVID is back. You guys should put your masks on. Everybody has a mask on here. I don't know what you're seeing. Combo XL, yeah, trade your own book. You know, so Combo XL, something to piggyback off of your point. You know, we started to notice this trend on the chat, I would say, probably back in March, right? When if you turned on CNBC, Bloomberg, any of the mainstream financial channels, you've noticed everybody was telling you to pile into these energy companies, pile in oil, go long oil. And when you start to see articles like that and crazy over exuberance, that's probably when you should start to unwind your long positions in energy or whatever the particular thing that they're talking about, because institutions, they manage billions of dollars, right? Not just millions, not just hundreds of millions, but billions of dollars. And in order to unwind all of those positions, they need the liquidity in order to get out. So a lot of the times they'll go on, they'll talk their book, they'll get retail riled up, so everybody piles in while they're selling off to that new liquidity that's entering the market. So that's a good point. That's a really good point about talking your book. Hey, Tom AK is here. Welcome, Tom. Good to see you. Jordan B, my good friend Jordan, says, hey, Tom, it's sad to see Ken Griffin at Citadel Securities leave Chicago, where I live, to Miami, but I completely understand why he left. The property taxes are lower, I imagine. Yeah, so Jordan B, you're absolutely right. I don't think it's the property taxes, because the property taxes are actually quite high. I think the property taxes may be a little bit lower in Chicago than in Florida. I think it has to do with the income tax. So there's no state income tax in the state of Florida. So I would imagine it has to do with something like that. But it's interesting, you know, when I bought my place in Southern Florida, a lot of people were like, oh, the property taxes are going to be really low. They're not low. You know, in full transparency, the property taxes are not low in the state of Florida. What is low and what they don't have is the state income tax. So definitely if you're thinking about moving to a particular place, you really got to run the numbers and know what the property tax rates are. I think that's why a lot of people that move to Texas and they buy homes, they get sticker shock at the end of the year, because they buy these homes and they come with, you know, $10,000 to $20,000 property tax bills. But it's a good point, Jordan. Really good point. So this is where they shoot The Tonight Show starring Jimmy Fallon right here. Wow, Disney Matt. Says, Tom, property taxes in Chicago are through the roof. You know, maybe it's just because I'm a Long Islander and Long Island property taxes are so egregiously high that anything that's not Long Island property taxes, I'm like, wow, what a deal. This is fantastic. Yeah, Mike C says, Tom, Texas has no income tax but massive property taxes. So in other Wall Street news, everybody, BlackRock will be moving a very, very small office to Southern Florida, I believe in Palm Beach. That is coined the term the snowbird office. I think some of the fixed income traders will be working out of the office, but BlackRock was very, very clear with the fact that they are going to leave New York City as their world global headquarters, which I think is good. I think New York City will always be the financial capital of the world. Yeah, I'm seeing a lot of the comments about, you know, Citadel Securities Ken Griffin's an evil guy because of the GameStop, and I really do. I just have to give a little bit of pushback on that. I think that a lot of new people that may have been a little bit inexperienced in how markets work, coming into the market during COVID when they had nothing better to do, and they're screaming, Ken Griffin's trying to rip you off and manipulate AMC and GameStop. I can guarantee with 100% certainty that's not true. It's definitely not true. And payment for order flow has been going on for a very, very long time, and it's actually very necessary. So back in the day, and many of you are probably old enough to remember this, back in the day there were no free trades, right? Sometimes you would have to pay $60 or more, or sometimes way more, on the buy and the sell. The only way that Robinhood is able to give you quote-unquote free trades is because of payment for order flow. Like, what do these people think, that it's just going to be free out of the goodness of their heart? And not to be snarky or anything, but I think a lot of people who put their money in Robinhood and trade on Robinhood are potentially a little bit inexperienced, and that's fine, but you can't cry foul play if you don't know what just basic market mechanics are and how payment for order flow works and why you were getting those free trades in the first place, right? So when you place an order on Robinhood, Robinhood is not in the business of execution. Okay, they send your order to a market maker on Wall Street, like a Citadel Securities, a 2 Sigma, a Jump Trading, any of those quantitative shops, and that's who does the settlement. And in exchange for that, Robinhood does not charge you a commission. So I don't know, I'm just going to give a little bit of pushback on that. I'm not in the camp that there's any malicious activity going on there. There's no free lunch anywhere. The reason why that there's free commission trades is because of payment for order flow. If you want to abolish payment for order flow, well, there's going to be no more commission-free trades. It's going to go back to you paying a commission. That's just what it is. Hey, Living in USA is here. Good to see you. Welcome. Wow, Dan Zhang says, hey Tom, I just got back from watching Bill Burr perform in Forest Hills. Awesome, dude. How was that? Somebody says, do you think another incident like GameStop or AMC could happen again? Yeah, I think it just did happen with one of the Chinese stocks. But at the end of the day, like, you don't want to get involved in any of that stuff. Like, just don't even pay attention to it. It's a waste of your time. A lot of people are so fixated and obsessed with this AMC and GameStop thing. It's a total waste of your time. These are dying businesses. I would just forget about it. Hey, Sunshine New York City is here. Good to see you, Sunshine. Welcome. Hey, Marketing Videography is here. This is Bill Burr is the best. Good to see you, Marketing Videography. So, Marketing Videography, what did you think about the CPI number today? So this is the roller rink here at Rockefeller Center, or 30 Rock. George Loya says, what's up, kid, from San Diego, California. Good to see everybody from San Diego. Welcome. Hey, Marty Lewis is here. What's up, Marty? Good to see you. So Marty Lewis swimming again. Awesome. Love that. Hey, Football Shane Life says, hello Tom from Wayne, New Jersey. Good to see you. Love Wayne, New Jersey. Good to see you. So if we think about the segments of CPI, or in the CPI report, that were really, really ramping, and the segments that actually cooled a little bit. Obviously, shelter costs, that makes up about 33% of the CPI, rose about 5.7% year over year. Fuel oil year over year rose about 75.6%. Gasoline rose about 44%. Food at home, so food that you buy to cook at home, rose 13.1%. New cars rose 10.4%. And used cars rose 6.6%. And not surprisingly, coming in at the rear end of the cost increases was medical care at 5.1%. But again, those are year over year numbers, right? So even though that sounds really, really terrible, which it is, and I think inflation is still a huge, huge problem, the good news is some of the month over month numbers were a little bit temperamental. They were coming down a little bit. Obviously, the biggest section of CPI that showed improvement is the price of gasoline, right? I think as of last checked, if you look at AAA's website, I believe the average cost of a gallon of gas is roughly about $3.99. I think we just broke $4 finally. Yeah, Mike C says, no way shelter is only up 5.5% year over year. Definitely a fake number. Well, I mean, you would think so, right? You would think so. And I think maybe it's, you know, especially people like me, if you live in New York or in a big city, maybe it's a little bit more, you know, our thought in our head is things must be up 50%, right? I know some of my friends here on the island of Manhattan that their rents literally went up 50%, if you could even believe that, but it's true. I think places like New York City, Boston, any of the big cities that really had a big rebound from COVID, I would say maybe Miami, Florida, monster increases in rent. Hey, Two Harbors is here. This is heat and electric stays higher. Shelter costs will remain high. This is Two Harbors. Yeah, that's true. TMs is, was the market and economy better under Trump? I would say yes. I would say yes. But here's what I would also say on the other side. I think that people assign too much credit to presidents in terms of stock market performance. I actually don't think that there's much of a correlation there. And that is definitely up for debate. But I think it just really depends on who the Fed chair is, right? That's really what matters more. I think the president is almost, I'm not going to say almost, but he has a lot less power than you think to influence financial markets, I believe. I think it's just the direction and the discretionary of the Federal Reserve that I think really drives markets. You know, if you have a really dovish Fed and they print a bunch of money and they have interest rates artificially low and they're cutting rates, well then that's probably going to be a favorable market environment, especially for growth companies, right? You know, a lot of the SaaS or software as a service businesses that take on a lot of debt to fuel, you know, research and development, to hire new sales teams, they're able to do that because money's cheap, right? But as the cost of capital increases, well, they can't do that. So I really think there's more prudence placed on the Federal Reserve as opposed to, you know, let's say the president, but that's just my opinion. Hey, Joseph is here. Says, how do you think the Lululemon? I personally don't shop there, but I know it's a pretty good business model. Hey, Jordan B. Says, Tom, I read in a Business Insider article that a lot of the Miami rent hikes came from disaffected New Yorkers who relocated en masse. I think that's probably one of the reasons, right? You know, definitely if you go down to Miami, you're going to see a ton of New Yorkers. And I think not just New Yorkers. I think there's a lot of people from California too. But not for nothing, everybody. I've been seeing a ton of California license plates in New York City. Has any of the other fellow New Yorkers in the chat noticed that? Have you guys noticed that? There's been a ton of California license plates in New York. I mean, that's a long way to go. Hey, Melissa 2087 is here. Good to see you, Melissa. Welcome, hope you're well. We're passing 45th Street here, walking down 5th Avenue. We're about to see an amazing view of the One Vanderbilt building. One of the more personal favorite buildings here. Yeah, Google says, yeah, I've noticed. It's weird, right? It's strange. Never before I would really see California plates. Autumn Beauty says, but New York people have been moving to Miami before the pandemic. Miami has always been a hot real estate market. That's true. I think, what is the saying called, everybody? They like to think about Miami as the 6th borough of New York City. Isn't that what they say? I think that's true, especially as it relates to like Palm Beach and Boca Raton. Hey, nice 190s is a lot of New Yorkers moving to New Jersey or Jersey City, I noticed. I noticed that too. Keisha says, is the Fed instructed by the president? Not supposed to be. They're supposed to be completely separate entities. But I think it is safe to say, you know, if we remember correctly, and this was a really, really big uprise on Wall Street back when Donald Trump was president. Fed Chairman Jerome Powell actually wanted to raise rates. And Donald Trump threatened to fire him if he would raise interest rates, which is definitely a big no-no. You're not allowed to do that, but the Federal Reserve is a separate entity. It's maybe a little bit misleading. The Federal Reserve is not a part of the federal government. It is a sole, separate entity. Two Harbors is convert more office space into apartments. Need to flood the market to get the rents lower. New York apartments still expensive. I agree with that 100,000%. You know, I think we were talking about that the other night. You know, I would look at the office space in New York City that is mostly vacant. Something like this. And provide developers with incentives to build affordable housing units. Now, I don't mean like Section 8. I mean just like normal apartments. It doesn't have to be tricked out with swimming pools and gyms. But that's pretty much what the developers have been doing now, is they've been, you know, building ultra luxury apartments. I think prime example number one would be 95 Wall Street. Hey, AJ says monetary policy runs cycles around fiscal policy, both of which POTUS has negligible direct impact, says AJ. Agreed. And again, AJ, I think a lot of people would disagree with us, and they would say that the President of the United States has a lot of influence on the stock market, but I would totally disagree. And that's why I would always call out Donald Trump, because he would say, oh, look at the stock market. The stock market is the highest it's ever been because of me. No, I mean, look at the Fed balance sheet, right? And I'm not trying to get political or anything. I'd say the same thing under Biden, right? Generally speaking, ever since the lows of 2008, there's about a 90% correlation now between the expansion of the Fed balance sheet and equity prices. So what are we doing now? We are in a quantitative tightening cycle. So Stanley Druckenmiller, one of the greatest investors of all time, the first thing he says in any interview he does, if you notice this, and if you want to watch a very, very good interview with Stanley Druckenmiller, type ! Druck, D-R-U-C-K, in the chat. Check out the Chrysler building here. And the Nightbot will drop a link to my personal favorite interview with Stanley Druckenmiller. And the first thing he'll say is, don't fight the Fed. That's the first thing he'll say. Because the Federal Reserve sets the tone for the market. If the Fed is in a quantitative easing cycle, which means they're expanding their balance sheet, they're buying mortgage-backed securities, they're buying US Treasuries, well, probably the market is going to react favorably to that and it's going to appreciate. But when the Federal Reserve extracts liquidity from the market, lets mortgage-backed securities and US Treasuries run off the balance sheet, well, the market's not going to react that favorably. TMs, is there a way for us to operate without the Fed? I think so. There's a big libertarian movement. Libertarians are all about the end the Fed movement. Now, if you want to watch an interesting, I don't really like calling it a documentary, just because it's really not. But during the Occupy Wall Street protests, I should say, not during the Occupy Wall Street protesters, Peter Schiff, CEO and founder of Europe Pacific Capital, went down to Zuccotti Park in Lower Manhattan, and he did interviews, and I believe it's called I Am the 1%. So if you go to YouTube and you type in I Am the 1%, Peter Schiff, that's a really, really good video, and it's by Reason TV. And there's really good conversations. He has a lot of really good conversations with people. And I think the overarching narrative there was end the Fed. So this is the One Vanderbilt building. It's a staple and an icon here in New York City. Hey, Emmanuel is here. What's up? Good to see you. Hey, Ali says, what time do the stores usually close in New York? I don't know. I'm going to say about 8:30, maybe 8:30 or 9. Really, the only thing that's open a long time is like things in Times Square and stuff like that. That's what I would say. No, Melissa 2087. I've not been to that hotel on Ludlow Street. I'd have to check it out though. But if you guys are enjoying the stream tonight, feel free to hit the like button on the video and subscribe to the channel if you are new. We are standing right outside of the Campbell Bar. This is a very, very cool place. So if you're visiting New York, you want to come here, this is a must go. It's beautiful in here. So the Campbell Bar, right here at Grand Central Terminal, really, really cool. And this is the lobby of the One Vanderbilt building. Hey, Jesse is here, says hello. What's up, Jesse? Welcome. Trust you're well. TM says great insight, thank you. Good to see you, TM. Jenny says hello from Wyoming. Welcome everybody from Wyoming. Lenny Garcia, good to see you. Says that's early. Yeah, I mean, not a lot of places here, to be quite honest, stay open that late. I mean, storefronts, things like that. Where they do stay open a little late, I would say, is probably around 34th Street, probably around 42nd Street. But, you know, if you walk down Park Avenue or something like that, things close pretty much normal time. Hey, Sally is joining us. Good to see you, Sally. Welcome. Everybody, in the distance, check out Salesforce Tower. So Salesforce is an enterprise software company under the ticker symbol CRM. But check this out. This is an even better view of the Chrysler building here in New York City. Gene says, is One Vanderbilt residential or apartments? No, to answer your question, there's a lot of office space there. A lot of office space. I don't think there's any residences there. No residences. Hey, FredX. I was looking for FredX in the chat. So another thing we touched on briefly tonight, everybody, for those of you who are just joining, is we were talking about the new Inflation Reduction Act and how that they did expand or extend the $7,500 tax credit for EVs, which is good news. But the bad news is they put an income requirement on there and they put a cap on the price of the EV, which is rather strange. Now, I don't know why they would want to do that, because if really the narrative and the goal here is to advance the adoption of EVs, well, why would you have a cap, and why would you have income limits? Hey, Ren1018 says, Tom, when are you gonna bust out the board again? I don't know. To be quite honest, I'm not too sure. It's a little bit harder to skateboard around the city because now there's so many cars back in the city. So I don't know. Maybe we'll try to gun for like a Sunday or a Saturday or Sunday. Mike MTL says government shouldn't subsidize consumer products with tax money. Yeah, so that is a good point, and that is definitely a good argument. But my whole point is, if the whole point about the bill, right? I'm very, very against the bill, but the point is, if the Democrats are so concerned about climate change and EV adoption, this pretty much just guarantees that nobody could get the tax credit. Does that make sense? So if you cap the income limit at $150,000, if you look at who's buying EVs, it's people who make around $150,000 or more, right? I think the average Tesla owner, their household income is like what, $160,000? So this bill will essentially guarantee that almost nobody gets it. And they cap for a sedan, right? So let's say if it's a 4-door car, they cap it at $55,000. What EV is $55,000? So I guess my point there is, it seems just like they're doing this and throwing it in the bill for show, I'm assuming. Mike C says the IRS promises the middle class won't experience audits. Yeah, that was another thing we were talking about that was a little bit perplexing to me, right? So we're hiring about 87,000 new IRS agents. Now, I understand that not all 87,000 of those employees are actually going to be auditors. But real quick, everybody, this is right outside of the Stephen Schwarzman building, the New York Public Library, one of my favorite buildings in the entire city. But here's my point about the IRS agents. You had an opportunity in this bill if you wanted to, and again, we won't debate on whether carried interest should be abolished or not, but you had a choice. I mean, you had a real opportunity here to cancel the carried interest loophole, and they didn't. And if the narrative on the left is really to go after the billionaires to make them pay their fair share, if that's really the narrative, well, that's the exact thing you have to do it, is eliminate the carried interest, right? Now, I'm actually in some segments in favor of the carried interest for reasons that we talked about on last night's stream, but to hire 87,000 IRS agents and claim that it's not going to affect anybody, or SMBs, small and medium-sized business owners, That's not necessarily true. And the reason why I say that is this. And I know the argument is, well, if you pay your fair share in taxes, you have nothing to worry about. That's not true. It's not true. And I'll tell you why. If you are a small to medium-sized business and you do your taxes yourself, or you just make enough money to pay your CPA, and you get an audit, do you have any idea how time-consuming and absolutely laborious an audit is? Has anybody here been through an audit? And the government doesn't reimburse you for the time spent on the lawyers, on additional time you're paying for your CPA to prove that whatever write-offs you took were sufficient. That comes out of your pocket. So I think that if you really want to increase the tax base, I think there's more efficient ways of doing it, in my opinion. And obviously, when we think about carried interest, essentially that applies to hedge funds, private equity firms, and venture capital firms, because essentially the argument there is you're managing other people's money and you're investing that money, and if you sell it at a gain, you're not going to pay ordinary income tax. You are going to pay capital gains tax, which tops out at around 20%. So let's say you make $50 million that year, you're probably only going to pay about 20% tax. However, if you made $50 million a year and you were susceptible to ordinary income tax, well, I believe the top tax bracket is 37%. So by getting rid of that carried interest loophole, boom, there's a big makeup in the tax revenue right there. And again, I personally don't believe you should do that, but if you really wanted to, put your money where your mouth is, that's what you should have done, not hire a bunch of IRS agents. Again, up for debate, but that's just my view. So this is the corner of 42nd Street and Avenue of the Americas, everybody. Hey, Troy 1995, what's up? Good to see you. Sherry G says tax lawyers charge $8K for sales tax audits. Mike C says you need a team of lawyers to deal with an audit. Yeah, audits are quite laborious. Let's just say that. So a lot of times if you get an audit and you fight it and then everything is fine, it's not like the IRS is going to reimburse you for your lawyer fees, for your CPA. They're not going to do that. So that's my argument. But I think I'm pretty fair. I believe people should pay their fair share in taxes. I agree. But the way to do it is not this. This is probably like one of the worst ways to do it. But check this out. Look at the Empire State Building tonight, everybody. Fantastic. Hey, Tom AK, thank you for joining. Dr. Longest, appreciate it. Sabrina Fair, if you run like a mid-sized business, you may. Christopher, that's funny, man. Hey, Elliot is here, says, what have you? Good to see you, Elliot. Hey, Big Fish says, what's the time over there? I'm not sure. Could we get a quick time check in the chat? I would actually be interested to see what time is it. I want to make sure I get my train. Andy is here. This is beautiful Empire State Building. Good to see you, Andy. So I guess the last topic we need to cover is, based upon the CPI print, what do we think the Fed's going to do? Do we think they're going to pivot? Do we think the Fed is going to be steadfast in raising interest rates? And in September, at the conclusion of the FOMC meeting, what do we think? Do we think we're going to get another 75 basis point rate hike? Well, the only clue that we're having here is one of the Fed presidents, Neil Kashkari, actually came out today and said even though the CPI print came in a little bit light, a little bit lower than expected, it's probably not enough to sway the Fed off course of getting to their target Fed funds rate. So if I had to guess, if I had to bet, just for fun, I would say that at the conclusion of the meeting in September, we're going to get another 75 basis point rate hike. That's what I would say. Now, I think many people would disagree with me, but here's why I think that. And the reason why I think that is because if we look back to what we talked about tonight on the stream, going through line item by line item, what segments of the CPI came in hot, what segments of the CPI didn't. The most important segment, I believe, of the CPI came in really hot, which is shelter costs. So Fed Chair Jerome Powell is going to look at this, all the other Fed presidents are going to look at this and say, look, shelter is still going up. I would even argue at an exponential rate. The only way to sort of get that under control is to raise interest rates. Because when you raise interest rates, that's going to slow people from buying houses. And when you slow people from buying houses, the overall housing market slows down. And there's a trickle-down effect, and that will probably lead to lower rental prices. So I think the only way the Fed could sort of fix this and bring down prices is additional demand destruction. So I think that's what we're going to get. But what do you guys think? Hey, Doga is here. Good to see you, Doga. Welcome. So we're outside the main area here where you get the subway. Unlimited stimulus is, do you think we are at peak inflation? I think we're at peak inflation for energy. I think so. Hey FB, what's up? We're in Times Square right now, FB, good to see you. NMB 045, hope you're well, good to see you, NMB 045. George says, hey Tom, the Fed will stay at a standstill, otherwise they will get slammed with insufficiencies at the Federal Reserve and they will lose stockholder earnings. Wendy Englandson says we're going to get another 75 basis point rate hike. Okay. Interesting. Yeah, I think there's still going to be a little bit of demand destruction that has to come to fruition here. And I think that'll align quite reasonably with the conclusion of the midterm elections. So if we can get a couple more rate hikes in midterm elections, will be in the rearview mirror. The market will have more certainty. And then I think we can continue into a new bull cycle. Although today was rather convincing and we did have a follow-through day. So we should be adding a little bit of exposure here, but I think we are short-term extended. Hey, King is here. What's up, King? Good to see you. So we're standing outside of 3 Times Square, which I believe is the EY office. This is the M20 bus. Hey, British Gray says, Tom, do you think that stimulus checks are going to be help for the economy? No, I think a lot of the stimulus checks were the reason why we're seeing a lot of this inflation. But British Gray, thank you for joining. Inflation cooled a little bit, but British Gray is joining us from Tampa, Florida. Welcome. Oh, Anthony says EY moved to the Hudson Yards. I think you're right. I think Accenture too is at the Hudson Yards, isn't it? I think Accenture also may be at the Hudson Yards. I think you're right. You know, there is a software company called Qualtrics, which I also believe is at the Hudson Yards too. But here we are outside of the NASDAQ. Autumn says, I want more rate hikes because home prices will come down. Yeah, it seems like a lot of people that want to get in a home obviously are going to want additional rate hikes so prices come down. I understand that. I definitely understand that. But I think the only way that prices will actually really materially come down here is if we get more supply on the market, right? And I think we're just starting to get more supply now on the market. We're just starting to get that. Wayne McKay says, Tom, the Fed should increase by 100 basis points. Intra-meeting Wednesday, August 31st. U.S. economy is nowhere near 2% inflation. Wake up, everybody. Yeah, I think you're right. I think at the end of the day, you're right. I think what would cause more demand destruction than just the rate hikes is increased quantitative tightening, right? So I think if you really wanted to do a double whammy here, I guess you can consider like a Paul Volcker or something like that. Raise interest rates more aggressively, but also remove some liquidity out of the system, right? You know, if you look at the Fed's balance sheet, is barely budged. Now, there's some reasons for that in terms of settlement and things like that. But I think I agree with your point. If you really wanted to address inflation, if you really wanted to do something about it, you would raise interest rates more aggressively and you would immediately start quantitative tightening more aggressively. But look, I think this is a first step. Energy prices are coming down. A lot of commodity prices have already come down from 3 or 4 months ago. But yeah, it seems unrealistic that inflation is going to get to that 2% target. But we'll see. We'll definitely have to see. I think there's going to need to be a lot more job loss for inflation to come down. Because obviously, once again, at the CPI report, there was a lot of wage gains. Hey, Denise says, good night, everybody. Have a good one. Thank you for joining, Denise. I appreciate it. Hey, Ryan Royal says, bright colors, neon lights. We must be in Times Square. Ryan Royal, what's up? Vixtas is watching you from South America. Thank you so much for watching. Hope you're having a fantastic night. Western Mass Dave says, Tom, Times Square a lot, what gives? Yeah, we have kind of been going to Times Square a lot on the channel. Definitely a lot more than usual, for sure. Definitely a lot more than usual. I think it's because I never come. I kind of like coming, you know, once in a while. I think this will probably be it for the next month. And then we'll go on our regular streak of never coming. Could we get a quick time check in the chat? I just want to make sure we are on time and I have to head back down to Penn Station. Hey Royus, Tom, any plans to stop by at the Express store where you worked in the past? Maybe another night? But yeah, you're right, Roy, I did work there way back in the day at Express. Definitely wasn't fun. Hey, Texas 05 from Corpus Christi, good to see you. Always a pleasure. Hopefully you're having a good day. Already middle of the week. Tomorrow is Thursday. It's supposed to shape up to be a really nice weekend this weekend too. 10:45. I think we're right on time, everybody. You know, I think on Sunday, once again, we'll probably wind up doing the Staten Island ferry. But I'm going to put you guys down for a minute. I got to take a little water break. Yeah, FB says the week is flying by. It definitely is, man. E is here. What's up, E? Hey, Tub of Popcorn says, what's up? Corpus Christi, Texas here too. We have a ton of people from Corpus Christi, Texas. King says, Tom, what was your GPA in college? Unfortunately, not that good, man. But I think the reason why my GPA wasn't good in school was because they counted attendance, and my attendance was never good because I was working so much. Photos from around New York says 10:46 time check. Yeah, Western Mass Dave says hydrate. But if you guys want to support the channel in a free way, if you scan the QR code on your screen, you could sign up for my free investing newsletter called Behind the Street Newsletter, where I give a markets recap on not only the US equity market, but emerging markets, fixed income, and real estate. So if you scan the QR code, join us over at the Behind the Street Newsletter. It is released every other Tuesday. It was supposed to be released yesterday. I was trying to edit a little bit today, and I erased the entire thing. So I was crushed, but it will come out soon. So if you scan the QR code, punch in your email, you will join us here on the Behind the Street Newsletter.
I'm your fan.
But yeah, the only reason why I didn't have a high GPA in college was because they counted attendance, and I always had to be absent because I had to work. So, but in terms of like the tests, I would always ace every single test with ease. Somebody says D for the diploma. So funny. No, definitely get good grades. Don't intentionally get not good grades. Get good grades. But I think if you could compromise your GPA a bit to get a little bit of real world working experience, I would do that all day, every day. You don't want to just sit inside and study. You want to get real world experience and network. I think networking is probably the most important, I would say. Hey, Q50, welcome. Wow, King says, I'm sure it was 4.0 all the way. Autumn says, what college was that? That's crazy. So I went to a college here in the City University in New York, in the CUNY system, John Jay College. Oh, look at these guys. This is really nice. Love the skating videos, love that. Anthony says, I got good grades in high school and I don't remember anything I learned. Yeah, I mean, that's sort of similar to me. I think the best experience and the most I've learned is through networking, right? I think if you're young, here's a real life hack for anybody who wants to get ahead and you're still young. The biggest life hack is people are more susceptible to pay attention to you and give you more time the younger you are. As crazy as that sounds. You know, if you have a 16, 17, or 18-year-old kid, you know, come up to somebody and, you know, they're interested in learning about real estate investments or learning about the hedge fund business, the hedge fund manager is probably going to pay a lot more attention to the 18-year-old that shows that he's hungry and that really wants to put in the work than to, you know, a 40-year-old that wants to be taught something, right? And that's just the fact of life. So I think if you're young, if you're in college, use your age to your advantage. I would definitely be all over LinkedIn and messaging anybody who's in an industry you want to work in, and they will probably give you 20 minutes a week, you know, to do a consultation for free. That's what I did. So if anybody's in college, I would spend my summers not partying or drinking. I would create a LinkedIn account, type up a couple lines on what you're interested in, or maybe you're trying to start a little business on the side, and then message people who are in the industry that you want to work in and say, hey, you know, I really admire your profile. You got 15 minutes to grab coffee, and the next thing you know, a big relationship starts, and maybe that's your first job. Maybe that's your first internship. You know, it's highly unlikely that type of stuff is going to work, or at least maybe work as much the older you get. But if it's, you know, an 18-year-old kid, you're going to be like, wow, I'm surprised that an 18-year-old kid actually even cares about, you know, their career or something like that. So yeah, Martin says it's not what you know, it's who you know. I think to an extent. I think it's a little bit of a mix. You definitely have to know stuff, but a network definitely does help. A network of people definitely does help. That I can guarantee you. So now we're passing Ray's Pizza. So did you guys know this Ray's Pizza, they're actually going to open a satellite office in Wynwood, Miami. So this is like a big tourist attraction, big pizza spot. Joe's Pizza, they're going to open one up in Wynwood. Check it out. It says if you're young, always volunteer, be willing to do overtime. Many people are lazy and don't understand companies are looking for people to trust. Check it out. That is like very, very good advice. That is really, really good advice. I would second that. Hey, Anthony says, hey Tom, love these videos you do. It's getting me excited for my trip to New York City. Well, thank you for being here, Anthony, and enjoy your trip, man. Appreciate it. Yeah, if you guys are new here, we usually do these live streams about 5 days per week between New York City and Miami. So if you want to join us on future live streams, feel free to hit the subscribe button. And we start at 8:30 at night. Azizul says, when are they going to do that? I think that it's already open. I think they may have just opened it last week, to be honest. You know, I'll have to ask Action Kid, because he's down there. Dolly Girl Twin says, be careful, you don't want to be used on the overtime gig workers both ways. Yeah, so I think that's a good point, but I think you should really leverage that time when you're young. I wouldn't do it if I'm in my, late 20s, but if I'm a teenager, something like that, I would definitely leverage that a ton. Nico Gonzalez says, hello, love your videos. Thank you so much for joining, appreciate it. Thanks, everybody. DJ Fisher is here. What's up, DJ? Rocco says, I'm going to Maine August 18th to August 22nd. Then I go back to my beach house again until September 7th. Hey, enjoy that. That's awesome. Photos from around New York is in here. Photos. Have you noticed the humidity totally broke overnight? It's actually a rather really, really nice day in New York. No humidity or low humidity. Thank God, because the past couple of weeks have been a trouble here for humidity. Probably even worse than Miami, Florida. Autumn says living in Miami is the dream. It's definitely nice. I love it. Western Mass, Dave. Yeah, sunshine in New York City says, yeah, it feels a lot better. Definitely does. Greetings from Mexico. Nice to hear you, especially when Mexico nobody cares about Wall Street. Hey, well, thank you so much. I wouldn't mind taking a trip to Mexico. Welcome to all of our Mexican viewers out there. So something like really, really terrible happened. Well, I'm not gonna say really, really terrible. I don't want to be too dramatic. But I probably spent about 3 days compiling and typing the newsletter. And I was editing it late at night. And for whatever reason, like the computer went nuts, highlighted the entire newsletter and like deleted it, and it saved it. Because where I write the newsletter is on a platform called Review. And it saves it. So it's not like you type it on Microsoft Word where you have to manually save it. It's just saved in the cloud. So every time you type, it automatically saves it. It's the same thing. Every time you delete, it automatically deletes. So I couldn't freaking believe it. I almost had a heart attack. But then I was like, you know what? I can't be upset about this for another second because it's not going to do me any good. But it was a bummer. So I guess I've just decided I'm just going to try not to think about it, and I'm just going to wake up and try to remember as much of the newsletter as possible and just rewrite it. Yeah, Gregory's is, so that was the thing, like that platform has the cloud backup, but every time you type or delete it automatically saves and there's no back. It was like the most tough, yeah. It was tough, man. It was tough, but yeah, I think I'm gonna have to switch over to, I don't even know. But I decided at that moment, I'm like, you know what? I just have to completely just forget about it because it's just a waste of energy to think about it. But now here am I thinking about it. But anyway, the newsletter will be out soon. I just got to rewrite it. I sort of remember everything that I wanted to talk about, but it'll be up soon. Hey, Ruby, what's up? So Ruby, you're just in time for the best part of the stream because the Empire State Building is looking like an 11.5 out of 10 tonight. Man, check this out, everybody. What would be your score? What would be your score here? This is like an 11 out of 10. This is one of my favorite spots to view the Empire here. Disney Mats is 12 out of 10. Yeah, Martin is like, yeah, you better get home, you got a lot of typing to do. That's true. I'll take you guys to Penn Station with me and then we'll depart ways. But for those of you who are just joining, not to worry, at the conclusion of the stream, as always, I will post the stream wrap up. And on tonight's stream, we did a deep dive into the CPI report. So economists were expecting 8.7% year over year. We actually came in rather light at 8.5%, but we did an absolute deep dive tonight on the CPI report. We also briefly talked about the Tesla tax credit. I shouldn't say the Tesla tax credit. I should say the EV tax credit. Then we briefly touched on Coinbase, their earnings, how they lost over $1 billion in Q2. So if you guys missed that conversation, not to worry, you can just read the recap that I post on the YouTube community page. Right now we are at Herald Square, 34th Street. Yes, sunshine after rain is like, I need to deep dive myself into bed. I need to deep dive myself into bed too, my friend. Wow, Natalie's like Tom the Moon. It's 94% full tonight. Where is the moon tonight? Let's go look for it. Hopefully the moon is on the way back to Penn Station. Hey, Enrico says it's awesome. Insurance practice exams this year. Nico says, you ever been to New Jersey? Yeah, I frequent New Jersey sometimes. Not as much as I'd like to, but we definitely go there from time to time. Hey, Doctor Strange says, let's rate the moon when we see it. I'm down. We gotta find it. It's probably, we'll probably be able to see it once we get to the corner of 7th. Paul says, look up. I'm looking, trust me. I'm looking. Hey, I'm looking. I can't find it. Sam is like safe moon. Yeah, please let's not have it be safe moon. All right, my phone is on 10% battery. So we'll have to see where the moon is. Hey, Dan Zhang says, hey Tom, have you talked about Disney earnings today? Missed most of the stream. So we didn't talk about Disney earnings. The CPI conversation took up most of the time. But maybe we'll do a little bit of a quick overview on Disney earnings tomorrow. So for those of you who want to join, we will be live tomorrow again at 8:30 p.m. when I get off of work. Ruby says, looks lovely, Empire State Building. Yeah, Ruby, we saw pretty good views tonight at the Empire. Pretty good views of the Empire tonight. But everybody, that is all for tonight. We will end it at the corner of 7th and 34th Street. If you guys enjoyed the stream tonight, please click the like button and subscribe to the channel if you are new. We'd love to have you along for another live stream tomorrow starting at 8:30 p.m. Eastern Time. So Gregory, I appreciate it. Nico, Sunshine After Rain. Jenny, thank you so much for joining. DJ Fisher. And everybody, Lou72, appreciate it. And we will be back with the Behind the Street newsletter very soon. I did accidentally delete the entire newsletter last night, which was cataclysmic, but we will be back. That I promise you. So NMB 045, Ryan Royal, Autumn. Thank you so much. Disney Matt, Jonathan France. Here, I'll take you guys across the street. Oh, and lastly, last announcement. So sometime before the end of August, we will be launching the Walks on Wall Street stream and the Behind the Street newsletter on Product Hunt. So if you guys like the streams, if you guys like the newsletter, I want to try to maybe bring on one particular employee to write more about specific topics that I think you guys are going to like. I can't say anything now, but when we do launch on Product Hunt, I will give you guys the link to the Product Hunt URL. And if you want to help us out on the day that we launch our product on Product Hunt, all you have to do is go onto the website and just click the upvote button. So the more upvotes the product gets on Product Hunt, the more people see it. And we potentially could have some opportunities for some grants or money raising here. So be on the lookout for that. I will let you guys know. If you want to look at the CPI numbers today, if you type !CPI in the chat, the Nightbot will drop the link to the CPI report. But that's all we have for tonight. I will see you all tomorrow, 8:30 p.m.